Avalanche, aka Avax, is now a top 10 cryptocurrency, forming a textbook 5-wave pattern. Are we likely that we are going to break $100 and even zoom towards $200? I think so, and I'll tell you why based on technicals. So if you like today's content, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on cryptocurrency. So let's dive straight in. Avax, look at this. It is now a top 10 ranked number 10, $20 billion market cap, $1.7 billion daily trading volume. But there's a particular pattern forming that I want you to be incredibly aware of. And when we see these patterns, we can really, really leverage. So here is a live chart of Avax. Take a snapshot because this is what we're going to finish on. You're going to finish on, Jiggy. It looks like this already. Yeah, I'm going to delete everything. I'm going to show you how I got to this very high probability conclusion that we're likely this low is going to hold, very high probability, and this high is likely going to get exceeded to either this zone or this zone over here. Right, you're taking your snapshot. All right, let's delete all of it and let's do it together. All right, first and foremost, markets moves in 5s and 3s, 5s and 3s, 5s and 3s on like a macro picture and then a micro picture. So what I see here straight away is a really clean textbook. 1, 2, 3. Looks like a 4 forming, and then we should anticipate a 5, right? That's basic Elliott wave Fibonacci. You want to know at high level. After a 5-wave sequence, what tends to follow is a big A, B, C correction. That's what we're looking for, and that's what we're looking at. Now, I'm going to show you, I'm going to reference, because I want you to get this picture, because when we see this, we're going to really leverage this information. So I'm just going to jump into my course, Elliott wave basics. Again, here we go. Bang. I'm just going to go into this. I want to just show you this visual. I'm not going to play the whole lesson, just this visual. Bam, this is what we're talking about. I just want to let you know there's 5-wave sequence to the upside and then a correction. So we're going to draw this out first. So the first step is to really draw out what you think, what is your opinion of the market based on the psychological mood on buying and selling behavior. And there's a couple of wave counts. So we're going to keep it really, really high level today. We'll look at this wave 1, what looks like a wave 1, a wave 2 down here, bang. And then we've got a wave 3, it's pretty clear, a wave 4, and it looks like we're on track for forming a wave 5, right? The wave 5 hasn't been formed yet, but we're forming a wave 5. There's a couple of rules that we want to be aware of that just shows you, is the market likely to do this? Is it likely to do this or not likely to do this? So there's a thing called rules and guidelines. I think I got it here, but there's one in particular that I want to reference. It is not this one. Actually, this is the guidelines. We're going to come back to that. What we want is this one here, the 3 major Elliott wave rules. Because what we want to know is wave 4 should not trade into the range of wave 1. It's a very important rule. And if it gets invalidated, then we need to reevaluate the market. And it's really this rule over here. Wave 4 cannot trade into the range of wave 1. And what we mean by that is this. I'm referring to this as a wave 4. But what we want to be aware of is, has it traded into the range of wave 1? Well, the answer is no. It was close, but it didn't trade. If it did trade below this, this would invalidate the count, and it basically tells us the psychological mood and the buying and selling behavior is different from what it looks like right now. But right now, it looks valid and everything else, so I am happy to go forward. Another thing what we want to look at is intermediate counts. You got intermediate counts, yeah. Waves within the waves, right? This is important because most people don't realize there's market movements within the market movements. And lesson 3 here, it just covers the macro, intermediate, and the micro. Right? So if I just get this image up, in fact, this is the perfect part. I'm just going to forward the lesson here.
This is the green of a wave 1, which also will write this up.
Yeah, all right, yeah, let's get to the point. There we go. This is what I want. Bang. I'm going to pause it over just here.
And then the market we're going to do one.
All right, this is where we go. All right, so with Avax, what it looks like, I know there's a lot of lines on the screen right now, but we want to just keep it simple because everything is difficult before it's easy. But with Avax, what we're looking like is a 1, 2, 3, and a wave 4. And then in the yellow, I've basically said wave 4s tend to break down to a minimum of 3 waves, right? And here is the yellow of A, B, C, right? This is the theory, but when you see this play out in real life, on a real life chart, it can be very valuable information, very, very valuable information. And by the way, if you want to learn how to do Elliott waves, Fibonacci, the real high level stuff, so you can just do what we're doing over here, I've actually got a Fibonacci and Elliott wave masterclass. It's 100% free, and it gives you this high level content. And if you like it, you can buy my course. It's £97, normally $997. It's, well, we're getting great feedback. I think a couple of testimonials down here just said great course. Now they can see what's happening in the markets as opposed to just random price movement. So take the free Elliott wave Fibonacci masterclass below. So what I want to do here is this wave 4. We are going to break down now the intermediate one degree of count down. So we can see this really clear, 1, 2, 3, 4, and now we're potentially on this wave 5. But what about this count here? Well, we just want to be aware of it. It looks like a classic A, B, C correction of a wave 4, right? There's a few things that we can go into that we're actually going to go into in a second of why this is a high probability wave 4 and that this low is likely to hold as a floor and as a launch pad for a potential wave 3 of a wave 5. Go 3 over 5. We're going to talk about that. This is important to know. It's important to know. So now let's just zoom in. So this is the first phase. We got Elliott wave count. Looks healthy. Looks good. Everything makes sense. We go great. So we're going to do a couple of things in a second. Next thing we want to look at is momentum, right? The trend is your friend. Ride it until its end, until it reaches its bend. You want to drive in the range of the direction of the major trend. So on the macro picture, just looking, higher highs and higher lows, well, the overall trend is up, right? The macro, right, is in higher highs and higher lows, means the trend is up. But then we can get a momentum indicator. I'm going to jump into my top left chart. I cover this in more depth in my course, but this blue and red line, on a real basic level, when the blue and red line are pointing up, it means the momentum is up. And you want to trade in the direction of that trend. If it is pointing down, you want to be careful, because then if you're trading and buying and hoping for it to go up, you're going against the short-term or intermediate level trend, which decreases the probability, and we want to increase the probabilities because we can only do probabilities and never certainties in this particular game. So the momentum is up. So that's good for us. Now what we're going to do is we're going to zoom in, still focused on Elliott wave pattern count, is we just want to look at, all right, Jagir, that looks like the macro count. But if we just zoom in a bit, what does it look like? What's happening on the intermediate level, like more immediate level right in front of us? Well, now, again, if I just jump back here, remember waves, there's waves within the waves. So what you'll see happening here in this particular lesson is like lesson 3, macro, intermediate, and micro wave counts, is for this wave 5 that we're referring to in this lesson, it will tend to break down into a wave 1, a wave 2, a wave 3, a wave 4, and a wave 5. Right, so if I just mute this and I'll press play, and you'll see that I draw it out there, bang. And that's what tends to happen. So what we're looking at when we're looking at Avax on the live chart is, it looks like we've had this initial 5-wave movement to the upside. Right, now that I've drawn it out, you can go, actually that looks pretty clear, pretty clean. And that's, I'm going to put that as a minor count, minor count. After a 5-wave sequence, what follows? Well, it's most typically an A, B, C correction. So what we're anticipating now, what I'm anticipating now, is an A, B, C style correction. And we'll put that as a minor wave count. I'm going to draw it like this so you see the lines. So it just makes it more visual for you to see, for us to see. And we go, this is what I'm now looking at. So now we're going to move into thesis. Your thesis. Yeah, what is our thinking of what's likely to happen next with high probability and predictability? Well, after a 5-wave sequence, 1, 2, 3, 4, 5, and a completion of an A, B, C correction, what tends to happen is a continuation of the impulsive movement to the upside. And in this case, this will end up being what looks like a wave 1 of a wave 5, a wave 2 of a wave 5, and now we're looking like we're going to begin a wave 3 of a wave 5. That's what it looks like to me. So what we're looking for is a potential correction to this downside, for a potential move to this upside. So now let's just zoom out again to really put this into context. Okay, over here, movement to the upside, what looks like a A, B, C correction, and then a continuation to the upside, right? This happens on a very large degree like this. Even if you zoom into these intermediate waves, you'll see the same thing happening again and again and again. And you see it even happening on the downside. You know, this correction over here, this would be a 5-wave sequence, a correction, and then a continuation to the downside for this wave A. So what we're looking at now is we want to go, okay, we're happy with this wave count. Our thesis is, our thinking, based on the probability of the pattern count, is that in some way, shape, or form, we're going to get this wave 5, right? If we get this wave 5, we can see what the likelihood is if it's going to move lightly toward that $200 mark. There's some good price movement there. So you go, okay, we want to now take this seriously. We're going to shortlist it. Looks good. So that's momentum and pattern. Now we're going to look at price. We go price. So first, with the price, what we want to look at is wave 4. We're going to look at wave 4. Is in this movement up, is this meeting our wave 4 criteria? And this A, B, C, is it meeting that criteria? So I'm just going to jump back into the course. By the way, I know I said it at the beginning, do take the free Elliott Wave Fibonacci Masterclass. It's in the description below. That's not what I wanted to click. Do take it. It's going to give you a very high level understanding of this stuff. What I wanted to just show you here, or is this one? Yeah. Is we're just going to go into wave 4. There you go. I know all this stuff. I'm doing this for your reference, just so you know. What I wanted to show you is the retracement for a wave 4, which is, I think it's here. Here we go. How we do a retracement for a wave 4. I just want to show you the retracement levels. And then the rest of it, I'll just do off the top of my head, but we'll speed it up. This last one, I'm just going to show you. The main one for a wave 4 in the course, which is just textbook Fibonacci, is 38 to 50%. But actually, the maximum is actually 62%. So we're going to look at this movement here for a wave 4, typical price zones for a wave 4. So now if I just jump back over here, we're going to go, okay, let's just measure this wave 3. And we're going to have a retracement of a typical wave 4, and does it meet that criteria? It meets the main criteria that it hasn't traded into the range of wave 1. All right, now we're going to move fast. Let me move fast now. Let's just get this done. 50 to 62%. Perfect. All right, so we can see wave 4 is in this range of 50 to 62%. 62% being the maximum. We're really in that range. Now we're going to do what's called Fibonacci extension, price extension. Most wave Cs are 100% of wave As. And you can see that this cluster is enough information for us to say, okay, this looks like the end of this trend over here, and we've got this reversal. We've got something called an overbalance of price in a 5-wave sequence to the upside. That's enough confirmation. But there is one other thing that we can also do. I'm going to do it for the fun of it, because it's important to know, right? We're going to go into a minor wave count of this 1, 2, what looks like a 3, 4, 5 of, if I can get this here, of a C, of a 4. And then you can actually do an end of wave 5 just to give us extra confirmation. Look at that. This is a typical maximum end of wave 5 zone, and it is in that zone. So this gives us great confidence to say this looks like that this wave 4 is not confirmed yet, because we're looking to look at what's happening ahead of time. But it looks good, looks very, very healthy. And the very fact that it hasn't traded into the range of wave 1 is on a clean ABC. And now we've got this price cluster. We go thumbs up. Happy, happy, happy. So that means this wave 5 is now highly probable. Highly probable. Not certain, but highly probable. So now what we're going to do is we're going to go into this more immediate wave count over here. And you guys, all well and good, Jagir. But we can't go back in time and make a decision over here. We can only look at what's happening right now. What's happening right now. So now if I just do the same thing, let's get rid of these pink boxes. These are no longer relevant for us. These other lines are no longer relevant for us. we are happy to say this is a wave 4 low. Again, I would personally put a question mark because it hasn't been confirmed. It just looks highly probable. I would literally put a question mark like this. That reminds me that this has not been confirmed. So it looks like this. The real only confirmation is really if the price goes above here. But that's going to be too late because we want to be buying if it's going to take off around here. But the confirmation really is when it goes above these highs over here. Right? This one will be the ultimate one as well. All right, so now what we're going to do, and again, I want to take it a step at a time, is what we're saying is this. I'm going to write it like this, just so we're crystal clear on what we're seeing. This looks like a wave 1 of 5. Let me write it like this, wave. So write it for your reference here, wave 1 of 5, right? That's what it looks like. And now what we're looking for is a potential wave 2 of wave 5. Right? Again, I'm going to put a question mark because that's what we're looking for. So now we can get rid of this pink box and we go, okay, this is our thesis. We're going, typically, when this pattern unfolds, this wave C would normally exceed the former wave A, right? So we should expect the movement to be sideways to down from a pattern perspective. If I just bring up a momentum indicator, let's just choose, let's just have, yeah, this is the one that I want. Let me just double check. There's a couple of settings that we can use, and each has pros and cons. Yeah, I'm going to keep with it's called the 13. It's called the 13855. We'll stay with that. So what we're looking for, actually, is a bit slow. What I'm looking at when I'm looking at these, by the way, is I'll show you. Is I'm looking at how well do these highs and lows marry up. How well do these particular highs and lows marry up? So with this down here and this up here, and it marries up quite well actually, right? And this one marries up better than the other one. So on the next bullish reversal, it may coincide with our thesis of this area, and then for the movement to go to the upside. That's what we're looking at over here. So this particular setting, 8533, is the better setting, right? So I'm going to do it like this. Okay, cool. So now what we're going to do is we're going to go back to price. So we've got pattern. We were looking at pattern over here. We go, pattern looks good. Now we're going to go back to price. We go, okay, if this is a wave 2 of a wave 5 forming, typical wave 2s are a retest of the former wave 1 beginning. What, you care? What? Okay, wave 2 is like an extreme retest of the previous low that normally holds. And it's like a launch pad. It's like a pad for a rocket to take off, which is normally the wave 3. What we're looking for is a wave 3 or a wave 5. We go, okay, so what's the typical price? Well, the typical price for a wave 2, it's what we saw earlier, and you'll see me do this again and again. The minimum what you should expect is 50%, but we've exceeded that already. The typical maximum is actually 78.6%. But as wave A, this one down here is past the 62%, it's more than likely we're going to see a 78.6% retest, right? Yeah, especially that the momentum, the immediate term momentum is down. So we can keep both lines there, or we can just go like this, whichever you prefer. I'm going to keep it clean and go just with the 78.6. Then the next most important thing, probably even more important actually, is you measure this wave A, and wave C tends to be very similar to this wave A in both time and price. So we're going to focus on price for now. Bang and bang. And there's two particular ratios. It's actually the 62 and the 100%. And you can see it's in this range. Very extreme, right? Very extreme. And then we're going to do one confirming indicator called the external retracement. I won't go into too much detail. Otherwise, it's become like a 5-hour video. All right, we'll go here, bang. And then this tends to be the minimum over here. So this is really relevant. So what we've got now is this price cluster. This price cluster over here. So ideally, what we want to see what's the cleanest is an ABC zigzag. What that means is just a normal, healthy wave 2 is where it goes A, B, and then the C exceeds the former A, right? And that'll be into this zone over here. Now, if it forms over here, that's where you can look for a nice entry point. If you're using a stop loss, it should be no lower than this point over here. And then we'll just wrap up with our thesis and our thinking, which is, this is why I believe Avax, Avalanche, let's just do it like this. I'll get rid of this. We'll just keep it nice and clean. So it's like this, bang, bang, is going to do a wave 5. And then last but not least, we'll do a wave 5 projection. They go, all right, Jiggy, what's the high probability wave 5 zone that we're going to see? As in, what is the high probability price zone over here? Because you want to make sure it's worth your time. Because, you know, we can look at the price projections, and if it's a high probability of hitting certain prices, well, you can do your numbers and you can go, yep, that's worth my time. Or it's not worth your time based on your risk, your plan, your tolerance, and everything else. So the two just basic ones we're going to do is the wave 5 external retracement. I covered this in my course, by the way, but if you want to get a feel for this, I think I covered this in the masterclass also, this wave 5. Wave 5, I do, because this is what we use to peg the Dogecoin high when it hit its all-time high and how we pegged it in advance. So the free Wave Fibonacci masterclass is in the link below. Take it, because I cover this in a lot of depth, but more in general terms with some good examples. And then the other one that I'm going to use, there's a few different ones that we want to do, but we're going to keep this quite basic. Is more often than not buying and selling behavior, these particular ratios. I cover the particular ratios in the course itself, and I cover some of them in the masterclass. And what you'll tend to find with Fibonacci price ratios and targets is we don't know which one's going to hit, right? We don't know, because it's a dynamic market that's expanding and contracting. What we're looking for is higher probability setups and higher probability price zones and targets of typical buying and selling behavior. And if it gets to this zone and it shoots past it, it will typically get to the next zone. But don't be overly surprised, because many cryptos will overextend with a wave 5 because of FOMO, fear of missing out, panic buying, and that tends to occur. But for a big cryptocurrency, like with Avalanche, what was the market cap? 20 billion, right? Well, if it hits this upper mark, this upper echelon of price, which is almost a 3x, that's going to be like a $60 billion market cap. $60 billion market cap. What would that take it to if the others didn't increase? 60 billion market cap will take it to position number 5 right now. Like if it got to 60 billion market cap, we'll take it to position number 5, and not that far behind Tether. Tether's like $79 billion market cap. Nowhere near Ethereum. Ethereum is on 300 billion, and Bitcoin is 740 billion, just under $1 trillion market cap. So there you have it. That's how we got to the conclusion of Avax is looking like a classic textbook. Wave 1 on a macro, wave 2 on a macro, wave 3 on a macro, ABC on an intermediate of a wave 4 macro, and forming a wave 5 macro. And then if that does complete, there's always one wave count above, which would mean this whole movement will end up being a wave 1. And then we should anticipate a big correction thereafter. Too soon to go into that because that hasn't happened yet. The focus now is this intermediate, wave 1 of a wave 5, wave 2 of a wave 5, potential with a question mark, meaning it's not guaranteed. But this is the low that if it goes below this low, that will invalidate a wave count and we'll need to reevaluate the market. But that's not likely to occur, though it can occur. And then this wave 5, wave 3 of a wave 5, 4 of a wave 5, 5 of a wave 5 is what we're looking for. And we are now looking for the two momentums to marry up and point in the same direction. What you get? Remember at the beginning we said the weekly momentum is pointing up. If you look at the top left-hand corner, there is pointing up. And then if I actually just bring up the daily momentum and I just smooth it out like this, and I do it like this, what we're looking for is now the daily momentum, the next bullish reversal, which will probably be over the next 2 or 3 days, to also be pointing up. Now you're going to have two momentum indicators both pointing up. The macro time frame of weekly and the more immediate time frame of daily. We're not going into the hourly charts, which is what the bottom left and the bottom right is. We're just focused on the 2 time frame. 2 time frames is more than enough. So there you have it. There you have it. That's my thinking and thoughts on Avalanche. The trend is your friend. Ride it until its end, until it reaches its bend. So if you like today's content, like, subscribe, hit the bell notification. That was a detailed one, but do take the free Elliott Wave and Fibonacci Masterclass because I cover all of that. And there's some key price ranges that we need to be aware of. The wave 2s, we need to be aware of wave 4s, and typical end of wave 5s. And we cover that all in the Masterclass because you'll see them time and time again because it's not only about the optimal buying positions, but it's also when you should be looking to take profits, when you should be looking to get risk-free, and then to get some context around the price movement as opposed to just it being random. It's not random. It's almost you're getting consistent results from random human behavior, but this mass herd psychology makes it predictable because they're identifiable in advance. All right, we're going to read a quote. We're going to go with Henry Ford today. I was just going to say the one, but I've said it like 3 times today. So let me do 2, right? Let me do 2. So the main lesson today was the trend is your friend. Ride it until its end, until it reaches its bend. In English, what it means is end of wave 4 is the beginning of wave 5. The weekly momentum and the daily momentum pointing up means that the trend is your friend and the trend is now up. That's what we're looking for. And it is your friend until we reach the end of wave 5, which is those price zones that we said. So the trend is your friend, ride it until its end of wave 5, until it reaches its bend, the beginning of wave A of the macro correction. So that's what I mean when I say the trend is your friend, ride it until its end, until it reaches its bend. There you go, like a nursery rhyme. And I'm going to finish on this quote. Henry Ford, it has been my observation that most people get ahead during the times that others waste. So when you take the masterclass, you can take it a few times. Buy the course because I break everything down to bite-sized chunks. You'll get an invite to my private Telegram. We do workshops. We've got a workshop today starting in an hour. In an hour for my private community. We've got a phenomenal community. Everyone just helps each other. Great vibes that we're building to really leverage this market. But when you see these kind of patterns, especially if you're trading, you can kind of look at it. Also, if you've got Avalanche and you're looking to see where's the best time to take profits, I don't think now's the right time. I think really towards that end of wave 5 price zone. I think it was up to the extreme was around the $200 mark, $190 mark. That is likely to hit, but not guaranteed. Probabilities, never certainties. Like, subscribe, hit the bell notification, and I'll see you soon.